So, you want to start trading. You've seen all of these gurus online flexing flashy cars, exotic holidays, and promising financial freedom. All of this from their phones. Trading's being promoted as an easy path to the top, needing only someone else's signals or a copy trader. But you saw past all of these scams, or maybe you didn't and you lost some money, and now you want to see if you've got what it takes. Well, how the hell do you start? First off, forget all of this. Trading isn't a shortcut to instant riches. The percentage of six-figure traders is close to zero. Trading is a good way to slowly build up your capital over time, but not a gateway to wealth. Don't quit your fucking job just yet. You need patience. And your first step is to get some money. If you start with less than £1,000, you can forget about any financial freedom. If you don't have that sort of money, you can take the prop firm route instead and buy yourself a funded account. Don't bother getting any challenges. You're only going to find out the hard way that you haven't got what it takes to be a profitable trader. Yet. If you want, get yourself an instant funded account instead. I'll put a link in the description. It's a perfect training ground for simulating real world conditions because there's actually real money on the line, unlike paper trading where each loss is just a number on the screen. So it will force you to learn risk management and controlling your mind, the two most important things in trading. You can get an account for as little as $44. You've decided which one? Great. Now pick a trading session and a time frame that will fit your lifestyle. To do this properly, you have to really look at the bigger picture. Let's start off with the session. You preferably want to trade the same session every time, as it will get you used to the market conditions and how it moves. Even though most of the big moves happen during the New York session, doesn't mean you can't make money on the other ones. Trade where you can show up 100% of the time regularly, not when you're working. When choosing a time frame, match it to how often you can consistently check the market. If you can only check it every hour, a 5-minute chart isn't for you. Instead, use a higher time frame like the 4-hour chart to understand the overall trend, and a lower one like 1 hour for entries. Stick to 2 or 3 time frames at most to avoid conflicting signals and self-doubt. Next, pick a strategy and master discipline. You've heard it a million times, without a back-tested repeatable strategy, you won't see long-term profits. Trading on intuition might score a few random wins, but it's unsustainable over time. Without a strategy, you lack risk management, meaning one bad trade driven by ego can wipe out your wins. This table shows how risk relates to win rate, proving that both elements are crucial, otherwise it's hit or miss. And lastly, without a strategy, you will be more prone to emotional trading like FOMOing in, revenge trading, closes your losses early, and not closing your profits, which just leads you to a disaster. There's tons of learning material online. Don't pay for no course. You have books, websites, YouTube videos. Just find what works for you. What's the easiest for you to spot? My favorite is supply and demand trading. But no one strategy is inherently superior. It's only good if it's profitable for you. Some strategy types include breakout trading, supply and demand, scalping, and trend following. No strategy is the same either. Scalping can be traded hundreds of different ways. The key is finding your edge without overcomplicating it. Nobody needs 1,000 indicators when simplicity works best. To show you what a strategy could look like, here's an example that combines supply and demand and trend following. This is a 1-minute time frame strategy, so of course it will not work for everybody. First of all, as you can see, we have the 200 EMA going up, meaning we are in an uptrend. We wait for a demand zone to be created, as you can see over here, by the stacked bullish candles. We then see the price retest the demand zone, however it did not tap into 200 EMA, so we do not open a trade. Next, as you can see, the price is in the demand zone and it tapped the 200 EMA. We then wait for confirmation. As you can see here, we have 2 big bullish candles and we will use this as confirmation to open a trade. We place our stop loss below the bullish candles and target the previous point of resistance. See, this strategy is very simple, but you have to follow the rules like a Bible. So discipline is key. And also, it's important that the 200 EMA is going up because we only look for buys if the trend is bullish. If the 200 EMA was going down, we'd be looking for sells. Once you've found your edge, stick to it. Only take trades that your strategy allows you to. Don't exit early just because a trade looks like it's turning, and never trade out of boredom. Overtrading leads to lower quality setups, so aim for 2 to 3 solid trades per day. If you can't find a quality setup, don't force it. Some traders even use dynamic risk management to adjust risk based on quality. Make trading a consistent routine, not an occasional fling, because mastering it takes time and dedication. Make sure you backtest the strategy before risking more money. Start out by using the lowest amount possible because you won't know if it's profitable until you open the 100 trades. Keep a log of the trades in Excel. For example, keep a detailed log of the open price, the stop loss, the take profit, and the outcome, so you can track performance over time. Don't assume it's profitable from a few wins, and don't scrap it after early losses. Stick to it consistently and keep building discipline. To build a discipline, detach yourself emotionally from the money that you're trading. That's why I say don't quit your job or go full time when you're just starting out. Do it only once you've built up your portfolio. If you are profitable in the long run and your losses don't affect you mentally, then you can start thinking about becoming a full-time trader. Treat trading as a hobby that gradually builds your capital, rather than as your sole income source. Whether you're using a prop firm or your own funds, relying only on trading for income can really mess with your head and your wallet. When every trade becomes a make it or break it moment, you lose the luxury of learning from mistakes. The constant pressure often triggers emotional decisions, fear, greed, FOMO, or revenge trading. That will ruin your strategy. You might end up overtrading or risking more than you should just to make ends meet. In the long run, the reliance leads to stress, burnout, and a vicious cycle of poor decisions and losses that can wipe out your capital and crush your confidence. And lastly, enjoy your wins, but embrace your losses, because they're the most important part of the learning curve. What you do with your losses will greatly impact how quickly you advance in trading. When you get a win, great, enjoy it. There's some proof that your strategy has potential. Log your entry, stop loss, take profit, the reason behind it, and the outcome. Taking a loss shouldn't be any different. Don't get angry at losses. Regularly review your trades. Ask yourself the hard questions: what worked, what didn't, and how can I avoid the same mistake? Most importantly, the market doesn't owe you anything. Accept that losses can happen, learn from them, and use them as fuel to get better, not as an excuse to throw the towel. Don't change your strategy, keep it the same. No strategy has a 100% win rate. Before we finish, I'm going to give you one last quick tip. Watch the fucking news. Find out what's happening around the world and what impact it can bring. Fundamental analysis is just as important. Also, don't trade during the news. But this will be the end of the video. Don't forget, the market changes every day. You've got to keep learning, adapting, and refining your strategy. Read trading books, watch video tutorials, follow credible financial news. Most importantly, learn from every single trade. And remember, 90% of people lose 90% of their capital in 90 days. I'll see you in another video.